as Lawrence alluded, yeah, so I'm going to record this. So if anybody has to disappear early, they want to show it to wife, husband, girlfriend, girlfriend's wife, husband, partner, then let me know, and I'll email it out as well. Feel free to ask questions as we go along. You can also send them in via chat, and I'll usually see them, and I'll be there to answer them as we go as well. Don't want you to forget anything and have any lingering doubts on all this, because it's a spectacularly amazing opportunity, and it's a whole lot better than what we thought it was going to be when we started doing it 5 years ago. It's only got better and better and better each year, or each review, or each inquiry as well. So why I was pushing Lawrence for objections was because I hear them quite a bit as well. I'm actually sitting in Vietnam, for anybody that didn't know, and I am meeting lawyers and investors, and lawyers would have to be the most skeptical people in the world. So I'm on my second appointment with them. And we've also got the NDIS providers that we would typically be dealing with Australia in Vietnam as well, because there's an enormous amount of money that is coming out of places like India, Vietnam, and into Australia, safest place in the world for property, consistent growth. And when on top of that, these people have heard that the government's going to pay the rent for 20 years, and after last week they're going to pay for 40 years, then they're unbelievably interested, and dragged me across the ocean to look me in the eye and see if it is all too good to be true or not. So that's what you're competing against, guys. Individual retail investors, you are competing with people with millions of dollars that they don't know what to do with. And an NDIS provider is much rather going to deal, or prefer, I should say, to deal with one investor who's going to buy 30 houses from them and use the same conveyancer, the same finance people, the same contract over and over again, than 30 individual lots of individual people. The benefit you have of dealing through me and Capital Investment Ideas is that we pull all you together, and we've got an enormous amount of buying power. We've got a very successful track record as well, and that means that we can persuade these NDIS providers to deal with us, give our clients leases on the same terms as what you would give a Macquarie Bank. And in some cases, we've got better leases than people like Macquarie Bank have organised for their super funds that they have under management, and other medium-sized super funds. So that's been absolutely wonderful, and one reason explains why we're busy, because everybody that did buy a house 4 years ago, 5 years ago, that's completed, has bought another one. I think, yeah, maybe there's one or two that haven't, but the vast majority of them bought another one. With all the equity, with all the income that it's generating. So your next one's free. First one is the hardest, like most things in life, but second one, all too easy. All too easy. Using equity, using income, and off we go again. What's the catch? The catch is it's not going to last forever. Okay. We know that the rent's documented. You can go onto the government website. It's all listed out there for you. You can't even adjust the rental figure. You put in an area, you put in a sort of a house, and then the government tells you how much they're going to pay you. And next year they're going to pay you more because it's indexed to inflation. So that's right in front of your face from day one. The NDIS providers that we have organised for you will give you a lease from day one. So it would be a pretty stupid thing to go and build an NDIS house somewhere after talking to a builder or a marketing company, and then, wait a year and then expect that some disabled person's going to magically walk and live in that house and start paying you rent. It's probably not going to happen. The average time for vacancies for NDIS houses is 6 months. And even though there's a huge demand, we know there's a huge demand, the government wouldn't be spending so much money on it and increasing the rent consistently if there wasn't such a huge demand. So why is the average vacancy 6 months? It's because they haven't dealt with us, they haven't got a lease up front, and they're not dealing with one of the biggest or a couple of the biggest NDIS providers in Australia. Then need staff as well. So there's plenty of factors that mean that you need to get off your backside, as Lawrence alluded to before. Before COVID, houses that were selling for $500,000 and getting $80,000 a year in rent. So whatever that is, nearly 20% return or thereabouts, or 20% return. Maybe a bit less. And now we're 700 to 900,000, and the income is over $200,000 for some of those houses, depending on where they were completed. So a $200,000 income from a $500,000 house is not a bad return, and that's what we consistently see as well. And we can actually prove that to you in a spreadsheet in a minute as well. So that's another one that it's not too good to be true. It is not going to last forever because there's not an unlimited supply of people with a disability. That's for sure. There is growing demand, of course. However, there's not an unlimited supply in any particular area. So once those people have moved into the house, they're typically not going to move out. So you need to get into an area, establish yourself. The house is customized for those particular people. It's taken them at least a year to have got that house. The best case scenario is it's taken them a year. So we know that it's taken them a lot longer than that to actually move into that house. If any of you watched the Four Corners report last year about trouble in NDIS land, it was all about overcrowding in group homes. So not the fault of the NDIS provider. There's not enough houses being built by you and your mates. Me, John, Lawrence, we're building as many as we can ourselves. So nothing wrong with the NDIS provider. It's just a lack of accommodation. So in some cases, you might have had in the past 20 people living in a 5-bedroom house. So of course, there's going to be tension, arguments, fights, bashings, arguments, stress, noise, and us wonderful people here are helping to eliminate that problem. So it's one of the few investments that it's just win, 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 win all the way around. Whatever point of view you're looking at this from, everybody in the circle is benefiting. We're typically, I come from it from an investor's point of view, so typically I'm just worried about how much money I was going to make out of it. And on a $900,000 house, which is not even the average value house in Melbourne anymore, and I think the average value of a house in Sydney, I think, is about 1.6 million. A $900,000 house, instead of getting $600 a week in Clyde or maybe $700 a week, southeastern suburbs of Melbourne, we're getting up to $5,000 a week or more. It's a bit more in the future as well. So it's a huge difference. So obviously the investor's winning. The participant gets a brand new house, so their quality of life has just improved dramatically. The NDIS carers have got a higher paying job as well. The NDIS provider is doing what they have set out to do, which is help people live a happier life, better quality of life. So they're achieving that. A lot of the ones that we deal with are not-for-profit organisations too. So it's never been about the money for them. It's been about quality of life. The government as well, they're the ones forking out all the money. So you think they might be getting stitched up, but not at all. Every dollar that the government spends, according to the Treasurer in December when they did the budget review, every dollar spent generates about $2.2 back into the economy. New jobs, obviously more tax. We're paying tax on stamp duty on land, GST on materials, PAYG on everybody that was involved in building it, and of course everybody that's then going to work in that house, which typically is about 10 new jobs per house. So we can't, if we go and build 10 new houses in a suburb, that's 100 new jobs that we've created in that area, at least. So think about the demands that puts on an NDIS provider, staffing levels, unreliability of staff, etc. Yeah, it comes back to that it's too good to be true. It's not going to last forever. That's for sure. Once areas fill up, once there's not enough staff to look after people, I'm not sure if any of you guys are going to get up at 3 o'clock in the morning and wipe somebody else's backside, but I certainly am not. That's for sure. So be quick. And our overview today just reinforces that, because in December, what the government said is they want bigger houses. If you want a bigger house, it's going to cost you more money to build it because there's an extra bedroom, and people worried about the size of the land, you're going to need a bigger block of land as well, because you've got a bigger house to put on it. A bigger block of land is going to cost you more money. So what we were talking about to you in December last year is no longer relevant. All right, we are now recommending a bigger, more expensive house, because that's in 5 years' time, that's what the government wants. So a lot of people would think, who cares what happens in 5 years' time? Maybe you don't, but the NDIS provider does, because he's given you a lease of 20 years, 30 years, 40 years. All right. Land size is not really relevant, because this is not a capital growth investment. It's a cash flow investment for most people on day one. And the good thing about that is that cash flow, I'm going to share a screen. So, oops. That cash flow is based on a commercial basis, is based on the income that it generates. So if we have a look at some examples, the is based on, I'm echoing, which is probably Liz. So I'm just trying to mute somebody. Can't see how to move. Liz, if you're there, can you mute yourself? All right. So entry-level property is about $750,000 in South Australia, about an hour out of Adelaide. Income, minimum of 170,000. If an investor was happy with a 10% return on that investment, which they typically would be, it's twice as high as what the interest rates the banks will give you these days, maybe 3 times as much, then that property's based on the income's worth at least $1.7 million. Any commercial bank will loan you a bit more than 60%, depending on your income and the quality of the lease that's attached to this. So conservatively, even if you only got a 60% loan, then you're able to redraw up to $1 million. So you've got about an extra $270,000 back in your bank account after you've had your deposit returned to you as well. So we're getting all our capital growth up front in the first year or so after it's completed, because usually the banks want to see some income coming in, and the proof of that is going to be in a bank statement or your tax returns. So we might need 6 months, 12 months. Other customers have revalued their properties, and that's where I've got these figures from. They've been able to redraw the excess funds. I know one guy bought a Porsche Cayenne, so he's got a free car that he's driving around in. most other people have actually bought another property and for free, and then the year after that, they aim to do another one with the houses completed. So you're not expecting NDIS houses to double in value like a normal everyday house in Australia over 7 to 10 years. You're expecting it to double in the first year, maybe a year and a half depending on income, 2 years, based on the fact that it's not a residential investment, it's more a commercial investment. We can go to a commercial lender. And I've used 10% in the top of these examples because that's ultra conservative. All right. If we look at some of the houses that we've had before, an $850,000 house, we could get $250,000 a year income. It's in the Melbourne metro area, so the financier will give us a 7% rate. So they'll base the value on $150,000 worth of income at 7%, meaning the property that you could have paid $850,000 for in December last year has actually got a bank valuation of $3.5 million. Even if you get a small loan against it, you can borrow up over $200 million based on that cash flow at that cap rate. So there's another $1.2 million for you to spend as you wish. And the income from that house, the interest on that loan will be paid for by the property. So you've actually got a whole pile of free money, and your only problem is working out how to spend it. So I have plenty of wonderful ideas on how to spend that money. And it's one reason why we're busy, because people are doing it. All right, people took an enormous leap of faith 4 years ago, 5 years ago when we started, got completely screwed over by COVID. Hurt as interest rate rises went, or interest rates that we had 0.75% went up to 7 or nearly 8%. But all worthwhile now, that's for sure. So whatever's holding people back, it can't be any worse than COVID-19 and paying for something that's not complete for 3 years before it's completed. So yeah, jump in, because very, very, very limited. And the other limitation is, of course, the builders. So, I can tell you that my plumber son earns more money than my emergency department doctor son, depending on the work that he's done during the week, but very common, okay? Very, very common occurrence in the building industry. So building costs are not going down. Definite shortage of tradespeople, and that just means that harder to get things built. So the NDIS providers that we deal with refuse to deal with the builder or normal builders. You have to use their own specific builder that they're happy with, who knows all their specifications and has been doing things perfectly. They also put a cap on those builders of only 100 houses per state. So that's another limitation. Last year, we started talking about a profit share deal with people, and we started negotiating that in April. We got the lease into a format that we were really happy with for our investors, and then we started selling those in September, and by middle of December, the 100 properties had sold. So no more properties for that year. So if you think that was last year, this year started already, so we're off and running. So it's not going to be too long before those 100 properties are all done and dusted as well. 100 per builder per state. So I'm trying to stick a rocket up your backsides, make no mistake about it. Very, very, very limited from that point of view. Alrighty. I'll just give you a bit of an overview of the changes to NDIS, and then we'll do an overview of the presentation. Excuse me, guys. I don't know what the weather is in Melbourne and elsewhere. It's about 35 40 degrees where I'm sitting at the moment. Window open. Alrighty. NDIS is really well run. I don't think you hear too many complaints about NDIS at all. The complaints are really just overcrowding, and any complaint comes back to a shortage of staff. So as well, from an admin point of view, or the length that it takes to get anything done in NDIS too. So those sort of problems tell you that there's demand for whatever is happening, and the government understands that, so it's throwing lots and lots of money at it. So we need to be sticking our hand out and grabbing some of that money. And so in an effort to make NDIS better, the government has a 5-yearly review, and it also, on top of that, it had a Royal Commission into abuse in NDIS. So one of the recommendations out of the Royal Commission was to say that they wanted bigger houses, and that's really probably the only thing that's relevant to us. So why did they want a bigger house? Well, the way we're going, we are never going to build enough houses to catch up with the demand for NDIS. Alrighty. I think there are about 2,500 people that are in NDIS accommodation, and there's about 43,000 that are waiting. So that means we've got to build 40,000 rooms, roughly. These statistics are all online as well. And I do have them, but I'm a little bit behind schedule today, because I also don't expect you to believe a word I say. Anything that I'm touching on here, waffling on, then we have the documentation to prove the statistics, to show you a lease before you sign up on anything, to show you bank accounts from other clients that have had, their audited results paid out to them, the government calculators, the 101-page document that explains what NDIS is and why the government's paying you nearly 10 times the normal rent. Everything is perfectly documented, which is really good. And that's another reason why we like dealing with it, because you don't have to believe a word I said. Everything that you need to know is documented, and we can document it for you as well, such as leases, which is really all you and the finance company wants to know about. So, as I mentioned, we're never going to get to build enough houses if we were continuing to build houses for 2 participants, which is what we were doing last financial year. So the government said, all right, let's get another participant into the house, because you're building the house anyway. It's not a big deal to go from 2 to 3, and at least that'll help with the backlog as well. Now, not every house is going to have 3 participants in it, but at least the capability is going to make a big difference. On top of that, so we've now have to pay for a 3rd bedroom for a participant, and they also want 2 living areas. So when somebody's family comes over to visit, you don't, you're not always going to have, 2 or 3 families sitting around the one living room. It's actually a physical impossibility in some of these categories of care as well, because if you think about the size of the wheelchairs and the lifts and other equipment that's needed to look after these people, the rooms really aren't just big enough anyway. Then, they want their private space. Somebody wants to watch cricket and somebody wants to watch rugby. So they need their different spaces, and people should not be just, left in their bedroom all the time. Not good for them. They need to socialise as well. On top of that, we've got the carers room too. So we're looking at big houses to meet what the government wants in 5 years' time. So there's no real point building for today. It would be nice, but you may as well spend a little bit more money and build for what is expected to happen 5 years down the track. Having another participant is also going to give you more income. So the absolute worst case scenario is that an extra participant is only going to give you $11,000 a year. Now, that's not even an NDIS participant. That's somebody that just needs to be some supported independent living. So they call that a SIL participant, supported independent living. And the $11,000 is 25% of their pension. And it's also the Commonwealth Government rental assistance that goes to you. Now, a lot of those people are going to end up on NDIS. Their application is just being processed, which is why the NDIS provider is actually looking after them and has them as a client. So eventually they'll usually turn into an NDIS participant, and then your minimum income's going up about $70,000 for another room to have somebody staying in your other room. If it's a high physical support person, then it's nearly $85,000 a year that the rent's going to go up on top of that $11,000. So the cost to build the bigger house depends on the NDIS provider. So one of the providers, their new plan of the bigger house is costing us $90,000 a year more than previously, in December last year, and we might need a bigger block of land depending on where we are. This is also another reason why we like regional areas. One is because there's very little competition for the NDIS provider. There's very little competition from investors because, Anglicare's not out there, Salvation Army's not out there in a lot of cases. They're relying upon individual investors. The blocks of land are obviously bigger in the country than what they are in the city. So we can fit these bigger houses without any additional cost to the land. So some people have had a bit of a whinge about sitting on their ass too long and now having to pay another $90,000 a year. But worst case scenario is that they're getting that money back in 8 or 9 years anyway. So from an investment point of view, not too bad. And of course, at some stage, you would certainly expect that participants, moves into the NDIS arena, and they'll probably get that extra money that they've spent back in 1 year, which would be more like it. One of the other NDIS providers, the extra cost is about $55,000. So it would only take you about 5 years to pay back the extra cost, and then you're in profit again. So that's still a very good investment anyway, even from a worst case scenario. And best case scenario, the extra cost is paid for itself straight away. So that's a bit of an overview on the changes that are relevant to us. Bigger houses, more expensive, but more income as well. And the areas of most demand as well, actually just before that, there's a little table here of landlord's insurance. Last week, I'm not sure that we got it up in time. It's a little bit out of date. So expect the costs to be a bit more like $3,000 or so. And we do have to speak to one particular mortgage broker as well. So I can email that out to people, once they've got their expressions of interest in as well. And I suppose we should mention that we can't just sit here sending you properties to buy, because by the time we've done it, emailed you, chased you up a couple of days later, the house is sold. They don't really last too long. So what we've had to do with the NDIS providers is show them an expression of interest, and then we can reserve that property for a couple of days, maybe a week, stretch it out a bit, just for people to have a read of anything that they want to have a read of, sleep on it overnight, see how they feel the next morning. Means there's no pressure from anybody here at Capital at all as well. And, that gives you time to read the lease, to see what you think, to send it off to any lawyers if you wanted to send it off to them. Read the NDIS documents themselves. So it's pressure off side of things to make up your mind on it. So everything these days starts with an expression of interest, and there's quite a waiting list of people. So you need to get your finance organised, and before you get your finance organised, you need to know in what name you're going to be purchasing this asset. So I'm happy to pay for an accountant to have a chat with you once you've filled in a fact find, and the fact find is just an assets and liabilities form, because the accountant's going to want to know how much money you've got, what your income is, how much tax you're paying, those sort of things, and then he'll be able to make recommendations as to whether it should be in a family trust, a company structure, your own personal names, and he'll run through the pros and cons of all those different options. This is an example of one of the newer houses, and this is physically in one of the areas of greatest demand in Australia. So Renmark is on the Murray River, or in the Riverina in South Australia. It's about an hour out of Mildura, and it's administered and run by the NDIS provider that has about a bit over 250 staff in Mildura. So serious business, enormous amount of demand out there. This is what they're begging us to get investors for, because they have people waiting with finance approved, and not a bad deal. If we have a look at the specifications, so when you look at the front of it, those of you that are not familiar, we've got starting on the right-hand side, there's an escape. All right, we need people to be able to evacuate from the property. So you see a whole lot of some NDIS properties, a basic thing like that's never going to get, if they don't have it, it's never going to get rented out. I've seen that. The perfectly flat path, so there's no steps anywhere there from the footpath up to the front door, down to their letterbox, and that would be the footpath if they ever put in a footpath in that particular country suburb there as well. So we've got one carer's room. There's 4 bathrooms in there. Each of the participants has their own bedroom and their own bathroom. So that's obviously greater expense too. But if you've ever had to deal with somebody in a wheelchair and getting them in and out of the toilet all the time, you'll understand why they've each got their own individual toilet and why it's money well spent from your point of view, because participants don't want to share a bathroom. The land's relatively big for Lawrence's customers, certainly bigger than any of the metropolitan areas, and it's relatively cheap as well. When we first started in the area, the land was $130,000, $150,000. So there's a little bit of money that has gone up there. And this is part of the last blocks of land that are available in Renmark, which is one reason why the NDIS provider is yelling at me, because they've reserved those blocks. They're not allowed to buy them and develop them because that's conflict of interest. So they need investors to build these properties for them, to look after their participants. They make their money out of the participants. That's what their company is set up to do. They are not property investors, and they're not allowed to be property investors, even if they wanted to be property investors. These days, build price is $750,000, and according to the government, that's a bargain. According to me, it's not as much of a bargain as what it was last year, so hurry up. But in a year from now, it's a screaming bargain, because that actually includes sprinkler system as well, and we get more money for having a sprinkler system installed in that house too. So there's a sprinkler system in there. I believe there's solar and everything else that may or may not be solar. I haven't actually, just let me check that. But there's a battery backup, etc. Everything else that NDIS high physical support requires. So the amount of participants in this area means that we are expecting 3 participants. Okay, so we're expecting over $200,000 a year. So you guys in one transaction can replace more than 80% of Australia's population's income with about 1 day's worth of paperwork. So it's definitely worthwhile having a very, very, very good look at. And so this is what we call a typical build to rent. It's a normal looking house in a normal area. That's the whole point of NDIS, to help people with disability integrate into the community. And you wouldn't know that people with a disability lived in that house from the outside. So it's blending into the environment. The build's a whole lot more. Government knows that. Oh, and the government says to build a 3-bedroom house like that, the cost is about $1.1 million. So we are getting a screaming bargain based on that, thanks to volume that runs through the place, with the builders, the economies of scale, and the rent is based on the building costing about $1.1 million. So there's plenty of houses that we've got that cost $1.1 million to build, and the rent is just going to be exactly the same or thereabouts, a bit over $200,000, but you've paid $1.1 million for a building. So this property is giving, a bit over a 20% return, whereas the normal everyday investment property, Melbourne might be 4%, 5% if we're lucky these days. In Sydney, it might be 2 or 3% return, maybe closer to 3, if you're lucky, 4% return. So here we've got an easy 20%, and we've got a waiting list. All the specifications of the houses are always available for you. You're not buying anything blind. You're actually not even spending any money that you're not going to get back until you're completely happy with what you're getting as well. So last year the houses could be about 210, 230 square metres. This one's a bit over 260 square metres for anybody that gives a shit. All right, basically irrelevant. The NDIS provider has said that's what I need, and so that's what we give them, because they're going to give us the lease. And who cares what colour it is, where it is, how big the land is, how many plants are in the front yard. Who cares? All right. So don't get stuck up on irrelevancies like that. It's completely irrelevant. This is just all mathematics, as we saw by the spreadsheet, based on the income that the thing's going to generate. All right. Now, the profit share properties, yep, I'll get to that. The profit share properties, we're still waiting for an updated stock list on those. Because when the NDIS said they wanted a bigger house, that means we have to change the plans. And then, of course, with a lot of the properties that we had, they were no longer relevant because the houses would not fit on the size of the blocks of land. So there's been a bit of a hunt for land as well. And, they're being packaged up at the moment now that everybody's back at work and running around and doing what they're meant to do. So, this is nearly $4,000 a week. Profit share is about $5,000 a week. To most people, that makes no difference. It's way above, way into the happy zone. So we don't really have to worry too much. And the easiest, simplest thing to invest in is a build to rent. All right, the banks understand it. You understand it. It's just the same process as a normal everyday investment property. You get a lease. There's people waiting for it. Off you go, and no need to do anything complicated. All right. Now, before I go off into an overview of NDIS, is there any other questions on the update? Because that's all about the update. The next week I'll have some profit share property, and the profit share property is where you're sharing the profit with the NDIS provider. The new bigger houses are expected to generate more than what we're currently getting. So the total income could quite easily get up to around the $300,000 mark based on what we expect. And so buy yourself a house, under $1 million, get $300,000 worth of income. Try and find that somewhere else. All right. You're only going to need 20, maybe 30% deposit. So if you've got $250,000, $300,000 and you're getting a $300,000 a year return, very good return on your money, but don't forget the capital growth, which is what we talked about in the spreadsheet as well. Alrighty, Samsung SM59. Have you dealt with us before, or have you seen the NDIS presentation before? If you could even just tap. I just wanted to know how fast to run through this. There's a couple of names of people there that I recognise, and some of our other customers. So anyway, so I'll run through this relatively quickly then. And shout if I'm going too quickly. Because by now most people know about NDIS. It's been on the TV. They know what it is. They know how to spell it. And all they need to know is really what to do with all the money that comes in. So, as I said before, I'm happy to pay for an accountant to work out what entity it should be in. You have to use our mortgage brokers because otherwise you're going to miss out on buying it by the time you educate a normal everyday mortgage broker. We use lawyers. We don't use a conveyancer because a conveyancer usually just ticks boxes, and if it's not correct, they give it back to you to sort out, which is no use you doing. So the lawyer works for you and makes sure everything's going to be wonderful. Anybody over 50 needs to have a chat with a financial planner. Any of the properties that we talk to you about can go into your super fund. There's additional costs to get them into the super. And those costs are anywhere from $50,000 to $100,000 to get them into your super fund. Seems like a lot of money, but compared to what your super is doing otherwise, it's a screaming amazing bargain, and is the vast majority of people that have got the money will do it once they understand the benefits and the actual returns. So spend $1 million on a house in NDIS, you're probably going to need 30% deposit. In some cases not deposit, 30%, because there's a 20% deposit for most people required, and then you've got stamp duty and other fees as well. So if you had 30% of the value of the property, you're typically okay. So yeah, spend $300,000 of your super, get a $300,000 return each year. Try to do that in the share market. Try and do that in a managed fund. All right. Happy to argue that point. The NDIS came into law in 2016 when the Labor government got in. So we all thought that the Liberals were going to chop it, as they do with lots of government initiatives to save money, but they actually increased it. So our initial customers took a very, very brave move based on an election promise, and we all know election promises get broken all the time. Don't they, Mr. Albanese? So that's worked out spectacularly well. Because when we started, this rent was $20,000 a room for an improved livability person, and now it's $70,000 a room in that short period of time. That's what an NDIS house looks like. There's a video there that we can run through another time if there's demand. We know that there's a demand. That's exactly why the rent has tripled. if there was no demand, the government wouldn't have start paying $70,000 for a room when it previously was paying $20,000 a room. COVID was really good. It was wonderful. It was fantastic for NDIS. All those people that were sitting in nursing homes had to get moved out, and all the people sitting in hospital had to get moved out as well. So that also stimulated the NDIS to get those people moved into appropriate accommodation. So we've taken advantage of that. Waiting list is not going down. And we can look on the government website and see what areas are increasing and why they're increasing. And once you've had a look at that, you won't want to be vaccinating your children. All right? The statistics are all there. So we know they're not going to turn it off now because they keep increasing it. It's in legislation anyway. So if you've signed up today, your house is completed and it's enrolled in the scheme, then the government's going to pay you the rent for the next 20 years. If you still have participants living in that house after 20 years, then the government's going to continue to pay you the rent as long as they're in that house. So disabled or people with a disability do not get kicked out of your house just because they either turn 65 or the house is 20 years old. So you could actually be receiving rent for the next 50 years for one of these houses conceivably. That's pretty good investment. And when the government worked out how much money they make out of it, then we realise they're not going to turn it off either. And if you also think about how much money they save, Bill Shorten said it costs $14,000 a week to keep somebody in hospital, but they're only paying you $1,500 a room, $2,000, not even $2,000 a room. Whereas if they kept them in a hospital, they'd be paying $14,000. So government's saving $500,000 a year at least, just in hospital accommodation costs. There is a minister of NDIS. That's how serious the government takes it. I think it's the second greatest expense that the economy that Australia has at the moment, and it's generating an income, so it's pretty good business. We don't worry about areas of capital growth and, what's the next hot spot and where we can get a cheap piece of land. All that is completely irrelevant because we need to be where the demand from the participants are that actually have a carer looking after them that works for an NDIS provider that will give us a lease. So the NDIS provider is putting his money where his mouth is that we deal with. So we deal with a few of the biggest providers in the country, and they look after us spectacularly well. Or my customers they look after my customers spectacularly well. And that's why we keep generating more houses for them. It's 4 different categories. Improved livability, I've mentioned that a couple of times. Last year we were getting $20,000 a room. We now get over $70,000 a room. Fully accessible with somebody in a wheelchair, but can pretty much look after themselves. And the high physical support people, they need 24-hour care. So those 3 categories can go together in the same house. A robust person, easiest way to describe them is that they've got some sort of a mental issue. And so a lot of people think, oh, that's a crazy person. And yeah, it might be a crazy person that wants to stab everybody. So that's why a lot of investors have not wanted those sort of people in their house. None of those people none of our investors were actually building those houses. Because of that huge shortage, that's why we did a profit share deal with the biggest NDIS provider of robust people in the country. And that's why you can now be getting about $5,000 a week if you build a house for a robust person. So that's an astronomical amount of income for an investment property. That last year, our clients were buying for $850,000 and getting $250,000 a year in income. However, not always crazy people. Might be just somebody with depression as well. So they're not going to hurt anybody unless they fall off the couch when they asleep. Then, of course, we all know it's a more expensive house. It's virtually indestructible. Those robust houses, you could shoot a gun into the window and the glass wouldn't break. It's that solid. The walls are all acoustic proof as well, so somebody screaming in one room can't hear it in the other. What else? Have a look at the walkthrough that I've done. I'm pretty sure we stuck it on the Capital Investment Ideas Facebook page, and it goes for about 7 minutes and it explains to people where the money goes. And when you have a look at how thick the doors are, how thick the windows are, how the soundproofing is, how high the ceilings are, the builder explains a couple of things to us. There's a $7,000 bench in the kitchen. You understand why you're getting so much rent and why they cost a bit more to build. These days, it's taking about 6 months to actually build them. So it's pretty good. Not like COVID days, of course, 6 months, 8 months now. And that means that anything that you sign up for now, you should be completed, and you may be getting income 12 months from now, depending on the NDIS provider. Every NDIS provider that we deal with, we give a 3-month rent-free period, and there's a few reasons for that. One is because once the house is completed, it still needs to be certified. So the certifier needs to come out, check the house. They're all busy. And that'll get done. All the individual requirements that an individual participant needs need to be installed. They're above and beyond the NDIS basic specifications, so NDIS will pay for that, come out of that particular person's plan. Takes a month to get somebody discharged from hospital. In a lot of cases, all the paperwork that needs to be done, somebody from the hospital needs to come and check the house, that it's safe for the people to go into, etc. I think I mentioned the technology needs to be installed as well. Usually they'll put one person into the house first. Then when that person's settled, then they might the NDIS provider might put the next person into the house as well. So and then of course, based on the occupancy, the NDIS provider sends an invoice to the government, and then the government might take a month or so to pay it. So there's not really any income in the first 3 months anyway. So rather than worry too much about stressing the poor old NDIS provider out at that time and harassing them for money, they've all asked us for 3 months rent-free, and we've agreed to it in each case on your behalf. So thank you, generous investors. Finding participants, obviously that was stressful when we first started, but it's completely irrelevant these days because you're getting a lease from day one, and we're only building in the areas where there's a demand. And that's going to change, all right? There's probably 6 properties in Renmark that we need at the moment. So once 6 houses are sold there, there'll be another area that will be on top of our list for returns to investors and for security of tenants. That's the government spreadsheet that they've put together that tells us how much rent we're getting. It's nothing that I make up. It's not market forces. It's not supply and it is related to supply and demand, I suppose, but the government is actually telling us how much rent we're going to get, and it's all listed right in front of your face. I can do cash flow analysis for you. Once we know what the interest rates are, what sort of property it is, how much the banks will loan you, of course, cost of insurance, all those things can be pumped in, and we'll tell you exactly how much money is going to go into your bank account every week. Nothing is negatively geared. You're going to end up paying more tax, which is a wonderful problem to have with these properties, and it'll also help you balance your books from your negatively geared properties. And that also touches on the fact that the huge incomes that these things are generating, just get rid of your shitty old investment properties. they virtually all had their capital growth over COVID. Interest rates are high, so they're not really going up as fast as what they used to. I've never told or suggested or even mentioned selling property before, but you know, in the last couple of months, a lot of our customers are selling, especially apartments that have no capital growth. It's money tied up. The expenses go up every year, a huge drain on resources. Just get rid of it and put your money into something like this. And even if you have to sell a property at a loss, nobody cares. Bad luck, suck it up, because whatever you've lost, you're going to make up in the first year with the excessive capital growth that we're getting out of these properties. So, yeah, just get on with it and put your money where it's actually making money. Definitely. Had lots of people. We have the #1 apartment sales person in Melbourne has actually sent out letters to his clients to tell them, you know, your investment's not performing. You've had it for whatever it is, 7 years in a lot of cases in the buildings that he's sending them off one by one to. It's gone as high as it's going to go. You know, typically, let's put your money into something that's going spectacularly well and huge cash flow positive. So enormous amount of people are swapping over from apartments into these things. But even normal everyday properties, you know, even what we were recommending, Tarneet, Melton, you know, what people were buying from us for years from $300,000 in Melton is now $700,000. It's not going to go too far over $700,000 for a long time, right? 10 years, yeah, it's going to be worth 1.4 million, but you'd be a whole lot better off putting that $400,000 worth of equity from that property into an NDIS property that you're buying for 900. When that's finished, it's worth 1.8, 2.5. Off you go again. Much smarter than just sitting waiting around for another 10 years to get $700,000. We can do it in a year or two, as explained. The government scheme, yep. Haven't asked anything about your own personal circumstances. So as we said, we need to start the whole thing off a fact find, which is your assets and liabilities. Then you'll speak to an accountant who will look at that fact find to work out what you should be, which sort of entity you should be owning that property in. Then we can get a loan, how much you can work out, how much you can borrow. Then we can make some recommendations as to what's the best bang for buck for how much you can afford. I'll give you the pros and cons of 2 or 3 different options of properties. There are properties that are the typical build to rent. There's some build to rent properties coming up that'll have a rental guarantee. And then of course we've got the profit share properties as well, where we're getting these days over $250,000 a property. So our job's to make you wealthier. Wherever you are at the moment, you can be doing better. There's human nature. So we can certainly help you do that. And then these are just the links to the government websites to make it a little bit easier for you to go and double check anything that we've been saying. So that's the end. Now any questions, anything I need to know? And if that's the case, then I will stop the presentation. I'll go find an air conditioner and let me know if anybody wants to have a look at the recording, and I'll send that out to you as well, and email through any questions too. Alrighty, guys?
Very good. Thank you, Joe.
All right. My pleasure. Lovely. Cheers, guys.